Good morning, America. Good afternoon from Germany. Here's Pascal again. It is Wednesday, mid of the week, and we still have volatility, even if the CPI numbers yesterday were just in line and the market rallied. Today we see a drop again because of more fear from the banking sector, especially from the European banking sector, and especially from this banking sector in Switzerland with Credit Suisse, but also other banks are tanking right now, and therefore the US market is tanking pre-market. So we will hop right into this topic, but at first we will have PPI news, Producer Price Index, in about 9 minutes. So let's prepare for this here. Our economic calendar for today, we will have core retail sales and Producer Price Index, both in about 8 minutes. This can also have an effect on the market, not as big as yesterday the CPI numbers, but for sure we will see an impact here. Let's see CME FedWatch tool first. In 7 days we will have the next meeting, so next week Wednesday the next Federal Reserve meeting with the interest rate decision, and you see the market is expecting now between no interest rate change and 25 basis points move. 58% for the 25 basis points move and 42% for no changes here. So it shifted back a little bit to zero move. From yesterday we had 31%, but I still believe that we will see 25 basis points because I don't think that the Federal Reserve will give this signal that they don't have the focus anymore on the inflation. We will see how PPI will come out, but we need to see a downturn in the inflation, but the Federal Reserve will still get higher with the interest rate level to tell the market that the focus is not lost on the inflation numbers. Okay, now to the market. Let's see, Nasdaq is retesting the 12,000 level today. As we can see, we had a nice rally yesterday. Yesterday the Nasdaq rose about 2.3% and closed at its highs. There was a nice rally into the closing. As you can see, yesterday we retested here the 12,000 level, but then we had the rally here into the closing and closed right at 12,200 points. So during the Asian session we just went sideways, but here you can see this was the opening at 9 a.m. my time when the European session opened, and here you see the stocks tanking. So this is the future market, but because of the European banking sector, so Mirko was right yesterday. You could have shorted the Deutsche Bank and others. Not a bad idea, especially Credit Suisse is down to, I think it was 25% when I've seen it just before the stream. So Credit Suisse had already problems in the last year. So they will probably also get into liquidity issues because a lot of money is pulled out of the bank, and the trust into the management is lost already. But I think that the government will save this bank and bail it out because they think they need two giant Swiss banks with UBS and Credit Suisse. But for now the market is a little bit in fear. It doesn't affect the US market a lot, but of course these are big banks. Credit Suisse and UBS are also in the US market, and therefore we are down 1.3% pre-market before the news. But as you can see, the levels are still in place here at the 11,990 points or 12,000 level, the important psychological one. We just went a little bit lower to trigger the stop losses, and then the buyer stepped in, and we are trading above 12,000 again here. So let's see PPI news. If we can go with better numbers for PPI, then for sure the index should rally, but it will be more difficult because the forecast is pretty low this time with 0.3%. Last time we had 0.7% and the expectation was 0.4. So it will be difficult to beat this one, but we had the CPI numbers in line yesterday, so everything can happen, and the forecasters can be right this time. Let's see how it comes out. And the core retail sales are projected to be minus 0.1%, so negative. and indicating a deflation here. And if we see negative numbers or more negative numbers, this should be good for the market. But if it's higher, like the previous month in January, we see this was a lot higher. This wouldn't be good at all. Yeah, but everything can happen here. So let's see the important levels here for Nasdaq. We are right at the important one of the 12,000 mark. The next one will be here at 11,872. This was the opening price of the day before yesterday. And the low point from Monday here, this was 11,677 points. On the upper side, we have the closing price of March the 3rd. This was 12,311. So 12,300 should be also an important level. And then the high point of March 6th, this was 12,485 points. So right below the 12,500. So if we see some bullish signs again, this could be the next target. So I still have a small long position, the same like yesterday, didn't change anything. My target would be the 12,300 if we manage to go higher today. Okay, there are the bad news from the European banks now, but normally this shouldn't affect the US market a lot. So therefore, let's wait for the news in 3 minutes, and then we will see which direction the market will take here. So trading sideways right at the moving averages, but we need more volume to see a pushback here above the 12,200 level where we were trading before the European session began. Let's see ES future. ES futures are also down, so even below the lows of yesterday. So again, we see S&P 500 is weaker than Nasdaq because we have a broader index with 500 companies in it, and there are just smaller ones, and the smaller ones are always earlier to the downturn than the larger ones here, and therefore the S&P 500 and the ES future is weaker than Nasdaq. Yeah, there was a question if I could talk about the expiration of the futures and options at the end of this week. So because it is the third Friday of a month, we will have a monthly expiration, but it is a special one because we will have a quarterly expiration. Every March, June, September and December we have the quarterly expirations of the futures, the index options and the stock options. So therefore it is called triple witching day because the prices of the stocks can dance like the witches around the fire. Some people say it's quadruple witching day, but it's not quadruple anymore because there were stock futures until 2020, but they were never traded a lot, and therefore it was always triple witching day because stock futures are not traded anymore on US exchanges. We just can say triple witching day. And what has these as effect? Yeah, of course, the market makers. We already talked about this in terms of zero DTE trading, and the market makers will have to hedge the positions. So if a lot of traders now are closing out their positions because of the expiration on Friday and are rolling over to another expiration date, then the market maker has to hedge again. So at first they have to de-hedge when the position is closed, and then they have to reopen the hedge if the position is again opened in another expiration date. And therefore the prices can change a lot in this last week before the expiration. Especially because these futures we are talking about, like here, ES future and Nasdaq future, these also will expire at the end of the week. Here you see March 17th, and therefore I will have to close these positions at the Friday at the latest, and then I can trade the June future again. The June future is trading about 130 points higher, and here's the PPI news. So let's see the outcome now of the news, and PPI is minus 0.1. Wow, that's nice. A lot lower than expected. That's pretty good. So there's a deflation in producer prices. Retail sales are down, lower than expected, minus 0.4%, and core PPI is at 0% instead of the forecast of 0.4%. Core retail sales in line with the expectation of minus 0.1. New York Empire State Manufacturing Index is also down deep, minus 24.6. That's pretty good. So in terms of inflation, of course, not in terms of productivity and the economy. But for now, there's the fear of inflation, and therefore the market is rallying again. So we gained 50 points to the upside. Yeah, not a big move like yesterday where we had the 150 points. But it's looking good. So these numbers should push the prices higher again. So trading at the 50% Fibonacci. Next target will be VWAP here, 12,100. There's the 20 EMA on a 15-minute time frame and VWAP, volume weighted average price. And you see the parabolic already changed to the downside, indicating an early uptrend. But we are still waiting for the crossing here of ADX. Let's see this on a 5-minute time frame. We are about to cross here. We just crossed. So a change of direction for ADX. And you see the parabolic already changed earlier here, 25 minutes ago. 12,100 should be a resistance zone here at VWAP. Maybe we'll hit it and then go back by 15-20 points. But on the next attempt, we should go higher here. And then we retest 12,175. So I was talking about expiration this Friday. And because of these de-hedging and then hedging again when the position is opened in another expiration date, we will see the prices moving because every derivative has an underlying, and therefore there is a market maker who has to hedge. What is a market maker doing? He doesn't want to go in a directional position, so he doesn't want to trade long or short and profit from the movement of the price, but instead he is on both sides. So he is a seller and he is a buyer at the same time, and he wants to earn the spread. So the difference between the bid and the ask price. And that's what market makers do. They are liquidity providers. And we need market makers to have liquid markets. So yeah, it's important to have a lot of market makers and a lot of liquidity, so it is cheaper for us to trade. But in this week, before the expiration, we will often see a lot of movements to the up and down side just because of these de-hedging and hedging activities again, and especially on Friday, when we see that the derivatives are expiring, then we can see even more volatility. So be prepared for this and be prepared to roll over your future positions early enough. If you are in a swing trade with March expiration, then you will have to go to June expiry. And what I wanted to say is June expiry has a higher point level here for Nasdaq future. So it is about 130 points higher. Why? Because we have 3 more months until expiration. And because when you trade a future, you only need to have a small amount of margin. For example, here for a micro Nasdaq future, which is 2 times Nasdaq. So 2 times Nasdaq would be around $24,000 value. But you only need about $2,000 to open a micro Nasdaq future. So you can have 22,000 in a savings account and earn interest payments for 3 months, and the interest are still between 4 or 5%. So you would earn risk-free money, risk-free interest on a 22,000 and only need 2,000 to profit from a rising Nasdaq. And therefore, the price of a future is higher, and it will devalue until we see the expiration. So these 130 points will come down day by day until we see the expiration in June, because it is a margin product and you only need a small amount of margin, and you can take the rest and invest it and get interest payments. And the higher the interest rate, the higher the difference is between the different expirations of the futures. Okay, we were at high points here of 12,096.75, so almost hit VWAP at 12,100. Let's see if we can go higher again now. Numbers were good, so the market should rise here, but maybe like yesterday we need more volume. We have to wait for market open to see more movement here, and to go through VWAP and push back to the highs from pre-market. So let's see the next news here for tomorrow. So today is only crude oil inventories like every Wednesday, and tomorrow we will have the building permits 1 hour before the market opens. It is 1:30 p.m. my time, 8:30 Eastern time, and initial jobless claims like every week, and Philadelphia Fed manufacturing index. So a lot of news tomorrow again. So I will try to live stream these, and especially from the European market we will have an interesting number, the ECB interest rate decision. They will probably go from 3% to 3.5%. It will be especially interesting because of the fear with the banks today. So maybe we will only see 25 basis points instead of 50 basis points. Who knows? We will see. And this will of course affect euro and US dollar exchange rate. As you can see, we are already turning down because there's fear in the market. This means inflow into the US dollar, and because maybe there's the fear that the central bank of Europe will only go by 25 basis points, and therefore there will be a bigger difference between the interest rate payments of euro and US dollar, and therefore the US dollar is getting stronger and the euro is weakening right now. So this is a heavy turn. Let's see how much it is. 1.5%. Wow, that's really heavy. Yeah, that's because of the fear in the banking sector in Europe. So we went back to 105. Big move today. Let's see what will happen tomorrow. If we see the expected 50 basis points, then probably we will go back to the upside. But if we only see 25 basis points, we can retest the lows here. Do you have any financial background, or are you self-taught? Yeah, I'm self-taught, Lucas. I studied economic finance, but I've only worked 6 months in a bank as an intern, but I have never worked full-time. So it is just self-educated what I'm telling you here. But I'm already 10 years in trading and living off my trading for 8 years. So I know what I'm talking about here. Sitting in the locker room of my work watching. Thank you, Richard. Thank you. Yeah, if you like the stream and you like what I'm telling you, then please give me a like here for my live stream. And where is the like? I only have it in German. I have to implement it in English for you. It's not working anymore. I don't know why. It only works one time per stream. I have to implement it in English for you. And yeah, please give me a like for the stream. And if you haven't subscribed so far, please subscribe to my channel. And I will go live for every important economic news which will move the market. So Silicon Valley Bank is still not trading here, but probably it will open as a penny stock. Let's see the Credit Suisse. I don't know, the ticker symbol is maybe CS, but let's see Credit Suisse. Just enter it like this. Yeah, CS. It's also trading on nicely as Credit Suisse Group. And it is down right now 28%. Oh, it was already a penny stock, but now it's even more penny stock. $1.81. Look the implied volatility, how it rose here from 55% to more than 120%, and it will be higher when the stock options will trade today. So this will be interesting, but it will be difficult to trade here because it's a penny stock, and we will probably have only $1 and $1.50 maybe, or $2 strikes. So I wouldn't trade this, but it's interesting to see. Let's see, Bank of America already turning to the downside again, making new lows here. So maybe another chance to take on new trades here in the options, because we will see higher implied volatility. What about Charles Schwab? Charles Schwab pre-market down a little bit, but yeah, it's only small. Not retesting the lows from Monday here. My thought on gold. Yeah, let's see gold. Where's the gold price here? So gold is rising again because of these fears and lower interest rate expectations. So we have less opportunity cost for holding gold, and therefore gold is rising. So the next target should be the high point, the previous high point here, be at $1,970 US. So this should be the next target. and we still have about 2%, 2.1% to these levels here. So this will be probably the next target to the upside. Of course, we can see volatile trading when the fears are going down, when we see lower, when we see tomorrow the high interest rate levels with ECB. Maybe they go by 50 basis points like expected. This will bring down gold again. But if we see only 25 basis points, then probably gold will rally and go higher here. So let's see. And next week, Federal Reserve, this will also move the gold price depending on the outcome. Yeah, let's see some other future prices like crude oil. Crude oil turned to the downside. And like expected, we saw the downturn here below the previous lows. So there was a break. And then you see today we retested this area. And then we sold off 2% to the downside today for crude oil. Natural gas futures here, a little bit weaker, 1.5%, but almost nothing here. For natural gas, just sideways trading below the moving averages. Still waiting here for a breakout. What else do we have? Let's see. Yeah, Netflix. Someone was trading Netflix. So Netflix went down from the highs here of $370 back to $290 today. So we retested already the 23.6% Fibonacci, but it's pretty weak here. So maybe we will retest the lows at $273.41. If the markets stay weak, then probably we will retest the low points here. It's looking like a shoulder head shoulder. If you can see, this was the first shoulder, this is the head, then second shoulder, and we broke below the neckline here, and therefore there was this big sell-off here. Yeah, it's pretty weak, so we are in this support zone now, but we can also retest the previous lows, and this would mean that we will have 5.9% more downside potential. Yeah, this was you, Daniel. Okay, perfect. Then this analysis is for you. I think you had a bear call spread, so this was a nice position for this market here. Yeah, I think this still has a potential. If Netflix will stay low and go even lower, then a bear call spread can be nice. I know the implied volatility is not the best here. As you can see, it was a lot higher before the earnings in December and January. Then it went down. But yeah, as long as the implied volatility is not rising too much, then you can profit with a bear call spread from lower prices of this stock here. And even if the stock is going sideways, you can profit with a bear call spread. Back to Nasdaq, we are trading at 12,020 again. So almost no movement here after the news. We have probably to wait for the open of the market to see more volume and more pushing here to the upside. But the fear is coming back in the banking sector, and it won't go out this fast. So we will see a roller coaster for the next days and weeks, at least until the Federal Reserve meeting next week, Wednesday. Do you have other stocks that you want me to analyze? Then write them down in the chat. We can make 1 or 2 more minutes and then I will close out this live stream. So it took you close to 2 years to be able to live off the market. Oh no, Lucas, it took me more years than 2 years. So I started trading when I was 13 years old, and yeah, I traded with real money when I was 16 with the first blue chip stocks. And yeah, during my studies I started trading in the option market. I began 2012. So 11 years ago now. And I'm trading full time since 2014. So for 8 years now. 8.5 years. Okay. Wix. Let's see Wix. Rising again. Look at this. 28 again. So the fear is coming back pretty fast. So yesterday we went down to lows of 22.2, and now we are back at 28. You see these roller coasters here? It's just crazy what's happening here. Yeah, the message from the Federal Reserve just turned the market upside down on Sunday when they said we will save all the deposits from the banking customers. But of course, we won't save the stockholders and bondholders, and therefore there is still fear at the stock exchanges. And this is what we see here. Nobody knows which bank will survive. And the banks can still go bankrupt if a lot of money is pulled out, especially the banks which don't have a lot of bonds to give to the central bank to get new liquidity. Yeah, ES dropping. It will be an interesting trading session, I think. Back below 12,000, pretty weak here. So, despite the good PPI news, market is lower because of the bad news from the banking sector. The biggest banks with proper diversification will be fine. Yes, I hope so. I hope we won't have a big blow up of the sector. But of course, the stocks can still tank from these big banks. Even if they are too big to fail, then because of the fear, we can see a sell-off there. Sometimes it's a nice opportunity to have a good entry for a long-term investment. But you have to have balls out of steel to get into these banks while they are dropping, because you never know where the final bottom will be. They can be weaker than expected and drop further. Therefore, you have to be cautious. Maybe it's better to wait for a clear bottom and a turn than to be early to a party. But if you invest in small increments, then it's sometimes easier than going in with big chunks. Market wants to stay above this 12,000 level, but has some difficulties here. Okay. I missed the beginning of your live stream. Did you talk about TLT? No, I did talk about TLT, but I did talk about the bonds. But let's bring back the TLT just to have this again. So, of course, with the lower interest rate expectations, the bond prices are rising. And this is what we also see here with TLT, with the 2-year bonds. And you see they are rising in price. So this means that the rates are dropping for the bonds. And yeah, this is what we see here, rising prices. So since the low here from March 2nd, the bond prices have risen 7.8%. It's just crazy for 2-year yielding bonds here. But that's what's happening here with this crazy market. And look at this on Monday, how crazy these moves were. We went to highs of 109 and to lows of 104. This was a crazy move here. So we will have more roller coaster while we have these this crazy market. But the more the interest rate expectations are dropping, the more TLT should rise. So next target on a technical term here would be the previous highs around 105.80, 109. This was the previous high here as well. So there's still some room to the upside, 1.75% to go to this resistance level. And I showed in the live stream yesterday that the interest rates are dropping for the bonds because of the rising prices and the fear in the market, and the lower interest rate expectations as well with CME FedWatch tool. So we can go back here for the probabilities for the next Federal Reserve meetings, and you see there's only the expectation for one more interest rate hike and the high point of 5%, then stay there until June, and then we will already see a drop, 25 basis points, then 50 basis points drop. Look at this, yeah, and end the year at 3.75%. This is a big drop, and now you know why the interest rate levels are dropping and why the bond prices are rising, yeah, because of these expectations here, and then stay the whole year or half the year 2024 at the same level. This is an interesting change, and it happened really fast. Just in 2 or 3 days, a big shift here in the interest rate expectations. So now there's more fear of a worsening recession and therefore lower interest rate levels. Yesterday you said when the banks get bailed out was the rises in 2008, it was 8%. Is this becoming less likely now? No, I don't think. I still think that the Fed did a good job in saying that every depositor is saved now. This is really important, but that doesn't mean that we can see divergent news from the banking sector. There can still be some regional banks that get illiquid and will have to close, of course. And this will always bring the market down again, like today with the European banking sector. So there will be fear and euphoria, and this will change. Therefore, we will have a roller coaster market. But normally, this should bring up the market because we will have lower interest rate expectations here. And this is good for the market. They want to have lower interest rate levels. But as soon as we see the high point, I've showed you the things yesterday. I can bring it up again. So we had every time a recession when we saw the top and then lower interest rate levels again, and then the markets dropped. So we will probably see this a rally until we have the high points here. So we have 1 or 2 more months to rally here, and then we will probably see a drop at the stock markets with the downturn in interest rates here. Here is it, the picture. I will show it again for you. So the Fed tightening over past years is unprecedented in terms of size and pace. Yeah, why? Because you see 4% over 30 months in the 80s, and then in the 90s, 4% over 84 months, then 4% over 24 months during the dot-com after the dot-com bubble until 2007, and then the recession in 2008 and 9. Then 6.25% in 54 months here after the euro crisis, and then again after COVID because of the high inflation, 6.75% in 14 months. And now we are near the high point. You have seen the expectations. And what will probably happen? Of course, a recession and a downturn again. And you can look up 2001, 2008, 1999, and 1990s here, and 2020. We always had a downturn at the stock market. So there's no way to go around this. We will probably see lower stock prices. But at first, we will see a rise because the market parties that we will have lower interest rate levels. This is good. And then the more the recession is there and will worsen, then we will have lower stock prices again. Okay, I hope I could give you some insights today and you will make some decent profit again. Let's meet tomorrow for the next economic news. Then be prepared to watch me going live again 1 hour before the market opens. See you tomorrow. Thank you for watching. Goodbye.